So, welcome, ladies and gentlemen, to the Kallanish International Steel Scrap webinar. I'm just going to give it a few brief moments for other participants to join, and then we will kick off with our event. Over the next hour or so, we're going to be tackling all of the most pressing issues that are impacting the global scrap industry today. I have a distinguished panel of guests, I'm delighted to say, which I would like to introduce to you briefly now. We have with us Osman Tureyyen, who's the General Manager at Metkim Metal, sales agent for various European and Canadian scrap merchants, especially for steel scrap and non-ferrous cargoes for the Turkish and Greek markets. Osman also markets such cargoes to Middle East countries amid the growth there in steelmaking capacity in recent years. We have with us Alain Eeckman, who's the Commercial Director at Casier Recycling, a company based in Belgium and specialized in both non-ferrous and ferrous materials. Alain has responsibilities on both the scrap sourcing and the sales sides. And we are due to have with us Amar Singh, who's the Secretary General of the Material Recycling Association of India. He's having a few problems joining us at the moment, but hopefully he will join the conversation later on. So we're hoping to have him come in later. Of course, I need to introduce my colleagues as well. Very importantly, Burcak Alpman, who's our Turkish markets reporter, our specialist on scrap. And she will be starting off the webinar with a presentation to set the scene before we go into the interactive discussion. And Burcak Odabashi is with us as well. He's our Middle East markets reporter. And we're delighted to have him here because there is some interest in the Middle Eastern scrap industry. So he will say a few words about what's going on there. If you have any questions during the webinar at any time, you can go to the right-hand side of your screen. In the control panel there is a questions box, which will allow you to ask any questions, and we will endeavor to answer them during the panel discussion. So without further ado, I will ask my colleague Burcak to set the scene with her presentation, following which we will continue the discussion. Thank you.
Thank you, Adam. Good afternoon from Istanbul, ladies and gentlemen. Welcome. I'll be covering the latest developments in the international steel scrap market today. Hope you enjoy it, and your feedback is highly appreciated. Starting with steel production process breakdown in 2022, 71.5% of world steel production came out of blast furnaces, while 28% came from electric arc furnaces last year. On the table on the right, you may see the regional breakdown of production processes. With the world's ongoing conversion towards scrap-based production, let's say in other words, electric arc furnace production due to the decarbonization, of course, these figures are expected to change in favor of electric arc furnace production in the coming years. The 114 million tons of global scrap trade in 2021 fell to 97.6 million tons in 2022 due to the contraction in the global steel market that started in the second half of 2022. This data includes the scrap trading between European countries. China is the world's largest consumer of scrap for years. In line with the crude steel production decrease by 1.7% in 2022, its scrap consumption has decreased by 4.8%. Turkey, a major market in the global scrap trade, decreased consumption by 13% last year. It consumed 30 million tons of scrap against 35 million tons of crude steel production in 2022, as electric arc furnaces have the largest share in Turkish crude steel production with 71.5%. The European Union and the US are the largest exporters of scrap in the world. Following Brexit, the UK displaced Japan, pushing Japan down to the 4th place with 6.3 million tons last year. This chart shows European scrap export destinations. Turkey, world's largest importer of scrap, is the major destination for European scrap exports. The Netherlands, with almost 4 million tons, had the largest share in European scrap exports last year, followed by Belgium, Germany, and Denmark. Although Turkey was the largest buyer of US scrap for many years, we can see that Mexico replaced Turkey last year with 3.4 million tons. Turkey followed with 3.3 million tons and India with 1.9 million tons. Coming to UK exports, after Brexit, the UK became the world's 3rd largest scrap exporter, replacing Japan, as I said before. Largest buyer of British scrap is Turkey with 1.8 million tons, followed by Egypt with 1.3 million tons and India with 1.2 million tons. Coming to major scrap importers, Turkey keeps its position as the leader in scrap imports with 20.8 million tons last year. Although Turkey is not among the largest 3 consumers of scrap and ranked as the 8th largest producer of steel last year, it is the largest importer of scrap due to insufficient availability of scrap in its domestic market. Here, I want to draw your attention to India's increasing import volumes. It increased imports by 63% last year, while also becoming a buyer of bulk cargoes. Turkey's scrap imports, the US was the largest supplier with 3.9 million tons. The Netherlands followed with 2.1 million tons, and the UK was the 3rd supplier with 1.8 million tons. In the first half of this year, Turkey's overall scrap imports fell almost 17% on year to 11.5 million tons. This was due to the decline in production due to the earthquakes and global steel demand contraction. The 2nd largest scrap importer in the world is India, which is becoming more important in the global scrap trade due to the significant rise in bulk purchases. Although the UAE has been banning exports of scrap for some years, last year it was still the largest exporter to India with 1.4 million tons. However, after Indian customs diligent examination and determination not to clear the imported scrap from the UAE, there was a significant decline in Indian imports from the UAE, which directed Indian mills to bulk cargoes. If you look at India's first half scrap imports this year, we see that USA becomes the largest source with 950,000 tons, followed by the UK with 810,000 tons, while the UAE falls to the 3rd place with 630,000 tons. Meanwhile, I want to touch on Indian steel market, which has strengthened and is expected to remain firm until the elections in May next year, which would support India's scrap demand, as the existing government will most probably try to finish the pending projects. Actually, we already started seeing the impact of this as stronger Indian steel market and lower HRC exports from India. Although China is not among the major scrap importers, I want to touch on Chinese scrap market due to China's importance in global scrap market as the largest consumer, of course. China's scrap market is shrinking and has been for some time. After a weak first half, China could be on track to see third consecutive year of falling ferrous scrap consumption. Actually, data provider Fubao estimates scrap consumption around 110 million tons in the first half of this year. This is, of course, is down 10.8% year on year. This follows a full year decline of 5% to 215 million tons last year, and 2.7% decline to 226 million tons in 2021, according to BIR. June this year saw the first year-on-year increase in scrap consumption of 2023, as the base for comparison in 2022 fell and steel margins recovered. However, with lower output expected over the second half of this year, scrap consumption is still expected to be lower on year. Coming back to Turkey as the market, the largest importer of scrap, and that determines the direction of global scrap prices most of the time, this chart shows how scrap prices are related to steel prices. As you can see, they follow a similar trend most of the time. Looking at the spread between scrap and rebar between 2015 and 2020, the average spread appeared at $174.2 with high fluctuations, as you can see on the graph. And this one is after 2022. The red line here shows the average spread, while the blue line refers to the average cost. For many years, we have considered $160 as average rebar cost, a production cost from scrap, with energy's share at around 7% for electric arc furnaces. However, in January 2022, production costs have remarkably increased due to the 52 to 130% rises seen in electricity prices and 25% increase in natural gas prices. Actually, this was the start of energy crisis in Turkey, which deepened after the war and reached an unbearable point after September 2022, when mills faced another 50% rises in electricity and natural gas prices, while further rises followed until the end of last year. To give an example, in November 2022, cost of producing rebar from scrap exceeded $310. With the reductions in energy costs since the beginning of this year, however, it's currently standing at $180 to $200 levels, depending on the mill's total capacity and utilization. Meanwhile, the current spread between scrap and rebar is at $188 today. And some global highlights that have been and will be impacting scrap prices. Rising scrap export bans are the most important issue for the countries that are dependent on imported scrap, like Turkey, of course. This year we are facing a supply shortage as scrap collection costs and processing costs have increased significantly due to high energy costs. Construction, one of the main components of steel-using sectors, entered the recession in 2023, owing to a contraction in the residential construction subsector due to rise in interest rates impacting demand. Energy prices, which have soared after the Russia-Ukraine war, continue to remain at higher than expected levels and hit the steel and recycling industries. Coming to the current facts that are impacting scrap prices nowadays, Although the depreciation of the euro per dollar provides European scrap suppliers room to decrease their prices, strong South Asian demand and sharp rises seen in freight prices recently are preventing this from happening. On the other hand, Turkish demand remains sluggish for a while because Turkish mills are struggling to sell their steel products in both domestic and export markets, as they have lost their competitiveness in the export destinations due to high energy costs. Before ending my presentation, I would like to invite all of you to our Steel Scrap Conference, which will take at the Çırağan Palace Kempinski at the Bosphorus in Istanbul on February 8 next year. Steel Scrap 2024 will aim to discuss all these issues in detail and provide steel participants from the whole supply chain with a unique opportunity to come together and discuss global scrap, DRI, and HBI markets. This is the end of my presentation. Thanks for listening.
Thank you very much, Burcak, for that very informative presentation. Many of the issues you touched there we will be coming back to now during the discussion. I'm delighted to say, as you may have seen briefly during Burcak's presentation, Amar Singh is with us. So welcome, Amar, good to have you with us. I would like to remind the audience that you can ask a question at any time. On the right-hand side of your panel, of your screen, there is a control panel with a questions box. We have almost 200 attendees currently, so let's make this as interactive a discussion as we can. And if you would like to download Burcak's presentation, that is also possible. Again, on the control panel, there in the handouts section, you will be able to see the presentation there in PDF format. So, 2022 was a unique and extremely volatile year for the ferrous industry globally. And while this year hasn't provided the same unforeseen shocks, thankfully, it has had its own set of challenges. Chinese steel demand has not rebounded after COVID lockdowns as strongly as many had expected, while stuttering economic growth, especially in Europe, is providing everyone with cause for concern. And I would like to open up the discussion by posing this question to all of our panelists, because it is a general question, but an important one to set the scene. What have been the largest factors, the most impactful factors affecting scrap trade and pricing this year or in recent months? Maybe if I can put that question first to Alain.
Yeah, hi, good morning. Main factors. Energy has been a huge one, obviously. That's a huge one beginning of the year. That kind of ebbed away. We kind of circumvented that one by basically using our machinery and equipments in a better way. What we have seen, which is incredibly important right now for us, is freight rates. And notably, I refer back to India. We move our scrap to India in containers. We're not the big bulk boys, but we have a lot of prime material, and our prime material is usually baled and goes to India. And just for the record, we are now moving our containers at about maximum $45 per ton from our place, our yard, into the main port in India, which is basically cheap. I think beginning of last year, we were somewhere around $100, $110 a ton. So ferrous scrap, I mean, we used to move a lot of non-ferrous, but ferrous scrap into India is for us becoming a very obvious flow of material. So that's been a main factor also. Third main factor for us is that on the incoming side, the inflow, the industry generally in Western Europe has been, as already pointed out by Ms. Burcak, has been slowing down. So we have less material coming in. It makes us also more stingy or less eager to sell. I mean, we have to be very careful on what we do. It's not like tomorrow we will have X amount of tons again. So we need to be careful in what we do, and we need to make margin. Those would be my three main factors.
Thank you, Alain.
Adam, if you don't mind,
of course.
I would like to add some points for the market where I work, mainly Turkey. In Turkey, this year, there are some factors affected the mood over here. First of all, of course, energy cost, as Alain mentioned, it's very important because electricity and natural gas are the main factors over here in Turkey. But also this year in Turkey, the matter was a little bit different because, as you know, 6th of February earthquake happened, which made a big effect in the demand in Turkey. And also, on top of that, election on 14th of May. And then this is also affect the scrap trade and the demand over here. I have to count on these 2 points. And another point that Turkey, as a main, as Burcak mentioned, main or leader import market for steel scrap, steel worldwide, Turkish mills demand very much down comparing to previous years because of very low local demand and because of very limited activities and demand from the export side. Turkish mills mainly concentrated to sell their product to local market. Export market was very, let's say, limited. Generally, Turkey sells not usual markets like Europe or America, mainly sell Israel, Yemen, some Gulf countries, etc., which is very limited this year for export. That's why Turkish mills have to concentrate locally to sell. And then, in this respect, just before to say some points, just as information, that last year Turkey made the production like around 35 million tons. And this 2022 first 6 months was about 19 million tons. But in 2023, it's around 16 million tons. I mean, the production went down already 16% in Turkey in first 6 months this year because of this effect, which we already mentioned. And scrap import also went down, in my opinion, dramatically, like 22-23%. I mean, first 6 months was 12.5, and this year like 9.6. I mean, 22% down. These are the main points which I may mention about the factors for Turkish market, just for your general info. Thank you very much.
Adam,
very helpful.
I want to add one more thing to Osman's comments. Yes, Turkey's scrap demand has decreased, and another factor that affected this was the scrap coming out of the debris of that earthquake. Southern mills have enjoyed this scrap, of course, and they have lowered their demand for obsolete scrap. And instead, they preferred buying high quality scrap that they are using with the debris scrap. That's one addition.
That's correct. And this will be affected another 1-2 years also to Turkish market demand.
Yes.
Interesting.
Adam, if you don't mind, I would like to add up a couple of things residing in Turkey. As you know, after the elections, Turkish economy has been driven by orthodox economic policies, and the interest rates are too high in Turkey. Real estate developers can hardly sell the finished residential units. And it looks like that we're going to leave this another 1 year until the end of the 2024. That's why the domestic demand in Turkey seems to be not increasing in the near future.
Thank you for giving us this opportunity, Adam. On behalf of MRAI, I would like to add a few things as Burcak presented in her presentation that India is doing very well and will be doing very well in coming years. The demand in India as of now is stable. There is no such high increase or no such high decrease in the demand for the steel, and we are very optimistic. Maybe another 3 to 6 months. There are since the elections are very near, there are chances that there will be a little hurdle in the liquidity, so the demand may decrease. Otherwise, we see a constant demand from Indian markets, and we'll be doing good.
Thank you very much, Amar. And of course, that constant demand from India has supported pricing even during periods of lower demand from Turkey, which Turkish mills have found challenging. So we will go to a poll now before we continue the discussion, because this poll is it's a question here which it's a good basis for our discussion. So if I could just ask my colleague to, there it is, right in front of you. The question is, all of you can vote, please do. We want to make this interactive. Where do you see the scrap prices being at what level in the last quarter, in the fourth quarter this year? Below $300 per ton CFR Turkey, $300 to $350, $350 to $380, $380 to $400, or above $400 per ton CFR Turkey. This concerns HMS 1 and 2 80/20 scrap, the benchmark reference price. So we'll just give it a few more minutes before we close the poll. Some very interesting results coming in here. The audience seems to be quite divided on this one, although there is one clear winner emerging. Okay, thank you very much. We'll close the poll now and put this to our panelists. One of my questions was going to be, where do you see scrap prices in the fourth quarter this year? Our audience seemed to think they will be between $350 and $380 per ton CFR Turkey. Would you agree with that, Osman?
Well, actually, this is what I was thinking, that I was just thinking very openly and very honestly, 380 plus minus $10. This is the point I was just thinking, CFR basis, because also, as you know, subject to origin, there are different prices in Turkey, CFR basis. I mean, if the cargo come from US, let's say 380 level, if from Europe or continent, let's say 370, but if it's Baltic or UK, then 375. Actually, at the end of the day, we are talking about HMS 80/20. Theoretically, it should be the all grade the same, but subject to yield in the arc furnaces, Turkish mills are paying different prices. But my vote would be 380 plus minus $10, somewhere in between.
How about you, Alain? Would you agree with that assessment?
Yes, I would actually. It means stability, isn't it, Osman? Stable would be good. Personally, I'm not optimistic at all for Europe. I mean, European consumption or scrap demand in Q4, I don't think is going to be huge. But as said, India is doing well. Turkey seems to be quite stable. So yeah, I could live with that. I would not like to come down, because in all honesty, we then probably would prefer not to sell. As said, we get less material in, we're in no rush to sell them. So, but stability would be good. Yeah, so I can concur with Osman. Yes.
One point also mentioned, Alain also in the beginning mentioned freight. Freight is very much important. I mean, which is out of our control. At the end of the day, as scrap suppliers or scrap traders, we are all depending on the freight position, because logistics is also one of the main factor in scrap trading at the end of the day.
Absolutely.
Also, Adam, I want to add that we have seen this year that once prices come above 380 levels, these levels become unaffordable for Turkish mills, because they cannot sell their products, steel products, when their scrap costs are at about 380. So what they do, they decrease production, they decrease utilization, and they hold purchases, which impact the prices. So I still believe prices above 380 will not be affordable for Turkish mills. They are squeezing their margins.
Thank you very much. One topic which we touched on just a few moments ago, and we should expand on because it's a very important trend which we see developing, is the increasing consumption of scrap in India. Of course, India is rapidly expanding its steelmaking capacity and its share of scrap usage. Does our panel think that Turkey's dominant role until now in the scrap import market will fade, and will Turkey be taken over by India in the coming years as the largest scrap importer and driver of the market? What would you say, Osman, to that?
Okay, very honestly, I don't believe that India will be leading scrap market in short period. Turkey will be still keep going on as leader position next couple of years. This is what I believe. But then after, of course, subject to the investments in India, because India is really big market, and there are many big and mid-size of companies are available there, and they are coming to the market step by step. I mean, same thing I'm thinking also for China. China is, of course, having huge, let's say, really huge number of factories, and these factories are big size of factories, not like India or Turkey. I mean, therefore, when China come to the market, they will be the leading of the world. But this will not be happen in short period. I believe another maybe 10 years. I mean, therefore, next, let's say 5 to 10 years, Turkey, India, Egypt are, or Middle East, because of new investments also in Middle East, in Saudi also. These are important points to be considered, are going to be leading. I mean, these areas are going to lead scrap trades, and Turkey will be keep going on, in my opinion, because as you know, Turkey also having some number of investments already started, and they cannot stop. I mean, at least we are expecting until 2025, Turkish theoretical capacity is going to be over 55, even 60 million ton. Of course, actual one would not be, I guess, 40-45, more than 40-45. But theoretical capacity with these new investments over here going to be 55-60 million ton. At the end of the day, Turkey will be still keep her position. This is what I believe.
I agree with Osman. See, India's domestic availability of scrap, of ferrous scrap, is huge. Whatever is our demand as on date, we are getting 85 to 88% domestically, and for 12 to 15%, I'll say, we are dependent upon imports. Government is coming up with such beautiful policies, such nice policies, steel scrap policy, then ship breaking policy, then your end of life vehicle policy, what will happen? This will increase the demand of domestic availability. This will increase the domestic availability of scrap more. That is why our dependency on export will be limited for a quite period of time. So I don't see India to be a leader in import of ferrous scrap in near future.
Amar,
I also,
please.
sorry, Alan. I also agree with Osman and Mr. Singh. I don't believe India will displace Turkey in the near future, but India will, for sure, will be a challenging factor for Turkey.
Yeah.
Sorry, I had a question for Amar. Is this for obsolete scrap or for primes or for both?
Both kind of scrap. We because there are many engineering companies, there are many manufacturing units. From there we get lots and lots of scrap. Okay, and all these come to the formal sector, and most of our demands are getting fulfilled from there.
Mr. Singh, how do you see your bulk demand in the near future? Do you think bulk demand will increase, or you will still be, containerized shredded will be dominating the market for another while?
To be very honest, it depends upon pricing. If we get better pricing, we will shift to bulk. If we get better pricing in containerized cargoes, if Indian markets are, I'll say, a more opportunistic market. They foresee the opportunity and accordingly they play. So I suggest that rather than giving a thought that India will be driving bulk market or through the container market, I'll say whatever the prices will be, accordingly we will behave.
It's very understandable.
Yeah.
Thank you.
Like
Thank you, everyone. Yes.
Sorry, would like to add one thing, what Mr. Osman said about the Middle East and the new investments in the Middle East. Please bear in mind that when they announce investments in the Middle East, they also announce new DRI investments along the steel companies and steel plants, steel works. For instance, there will be a flats investment in Saudi Arabia, and they're planning to have 2 models of each 2.5 million DRI production. And in the coming 4 years, in 2027, out of the 3 investments of the Brazilian miner, they're going to start their operation for hot briquette iron production. And they will have in Oman, in United Arab Emirates, and in Saudi Arabia, in these 3 countries, HBI production, since these countries are rich in natural gas. Of course, that's not going to be only for the domestic markets, but that's going to be also for the export markets as well. To where, for instance, to Egypt, to where, for instance, to India, or to Saudi Arabia, even to Turkey. So when we consider about the coming 5-10 years scrap markets, we need to bear in mind these investments as well.
Thank you, Burcak. That's a good point. I'm glad you brought the Middle East in there. How closely correlated are prices of scrap in between Turkey and the Middle East? If you know, how closely do they move together?
Let me start from the Saudi Arabia. Saudi Arabia has got its own dynamics. They generate nearly 4.5 million tons of scrap in the domestic markets, and scrap export is banned in the country. However, when the domestic scrap prices are going up, they start importing scrap, but the quantities are not large. I can give you the numbers if you allow me. For instance, in 2021, it was nearly 300,000. and in 2022 it was nearly 240,000. These are not large quantities, but of course they follow up as a benchmark the world market as well. That's the same in the UAE, but the UAE's domestic scrap costs has been driven mainly to the by the export of scrap in India, and for some reason, although scrap export is banned in the United Arab Emirates, they could not stop this. And when in early August, Indian customs showed their determination after diligent examination that smuggled containerized scrap is coming from UAE into India, then they stopped clearing these goods. Now it's been shifted to Pakistan, the export of scrap to Pakistan, but these are not large quantities. So the global scrap prices definitely have an effect on the domestic scrap costs, but not significantly.
And
very much,
another, Adam, I just would like to add one point. This is also my experience. Burcak also knows very well, I'm sure, that the mills in Middle East are strictly and very closely following Turkish mills. Turkish mills' behaviors, Turkish mills, let's say, effect in the market, they are very much closely following. And very honestly, when I have the inquiries from Turkey, at the same time or a week later, I'm having the inquiries also from Middle East. And that's why I can say that Middle East are just based on, of course, local supply and local prices, but at the same time, they are closely following Turkish mills' behavior before they make any purchase.
Thank you very much, Osman.
And one more thing, Alain. The benchmark mill in the United Arab Emirates, they have announced their determination to reduce their carbon emission, and they're planning to increase their scrap consumption to 1 million tons. This is almost half of the scrap generated in the country, but it's not going to be a surprise to see that the United Arab Emirates will start to import some scrap in the future.
They will start importing, you mean to say?
What I'm saying is, in order to reduce their carbon emission, they're going to increase their scrap input in the crude steel making. And their plan is to increase to 1 million tons of scrap consumption per year. This is almost half of the scrap generated within the country. So it's not going to be a surprise to see that the UAE will start to import some scrap in the future.
This is going to be a big challenge. Okay, now everyone wants scrap, including India, but no one wants to give back their scrap. And this is affecting the trade very badly. Like just happened in India, there's UAE has banned the imports, and various mills were importing material from UAE, and it caused a huge disrupt in the market. A huge disrupt in the market due to customs. After some interference from Ludhiana, which is northern part of India, and from MRAI office, those containers got cleared. But this kind of trade barriers are going to affect the countries where the demand is more and their availability is less.
Sure.
Yeah, absolutely. And this is a very important topic, which we are going to come on to shortly. Resource nationalism, so to speak. Various regions and countries protecting their supply of strategic resources. Scrap is very quickly becoming a strategic resource amid decarbonization in the global steel industry. We have a very interesting question coming in here from the audience. Thank you very much for your questions, by the way. We've had many flowing in. One of them here is this member of the audience has noticed that the recently lots of scrap deals coming into Turkey are unexpected grades, such as shredded or 9010, instead of the HMS 8020 that we're all used to. on a regular basis. Is this actually happening, and what is the reason for this? And does it mean that scrap supply is narrowing for Turkish mills? Osman, are you seeing this?
Yeah. Actually, we can say there are a couple of parameters on that. First of all, please remember I mentioned earthquake happened in south and southeast of Turkey, which was really big area and affect the mood of the people. But after certain months, of course, all these areas started to generate steel scrap, and there are huge works in there. But the quality of steel scrap which is coming from that region is mainly D-bars and low-grade scrap. And the mills in Iskenderun region in south of Turkey, nearby the Syrian border, started to use these cargoes. But these cargoes are not good enough for them, especially for flat production, to be able to make the production. That's why they have to concentrate high-grade qualities. This is one effect. I mean, Iskenderun region mills are willing to buy now 90-10 shredded, bonus, even bushling, to be able to catch certain production yield during melting the scrap. This is one effect. The other effect, of course, we are talking about green steel. In any case, this aim green steel in worldwide, there is a certain and concrete aim, but at the same time we have to accept that the war between Ukraine and Russia unfortunately affect this matter negatively, and maybe this aim had to be, or has to be, whatever you call, postponed. Okay, and but during this period, European Union already announced that they have to go this aim, green steel, and Turkish mills also have to go in that way. And whenever they catch the opportunity to catch 90-10 shredded and bonus, they are using. As you know, Turkey is mainly known as, let's say, commercial grade 70-30, 80-20 buyer dominantly. But recently, Turkish mills also willing to catch high-grade qualities because of local generation and also because of green steel. That's the point. Another point, one more point, it's important, another important point, that at this very moment, this year, Turkish mills are not very much concentrate to make big quantity of production. They are mainly concentrate for profit. I mean, they don't want to produce, let's say, millions of tons, or instead of to make 2 million tons, to make 1 million tons with a certain profit margin. That's another reason to go, because there is not much demand on the finished product, and there is no need for the Turkish mills to speed up their production capacity.
And is this causing shortages then? Because everybody's after these high quality grades of scrap because of their better properties. So are Turkish mills having issues sourcing this scrap?
Yeah, absolutely. I mean, not only Turkish mills, also European mills, Indian mills, everybody is looking for prime grade, high grade qualities, low impurity. This is very much normal. I mean, Turkish mills were buying before because they were not very much worrying about these kind of things. But now everything is very much sensitive, and not only Turkey, but also India, all European mills, US, everywhere are concentrate to these high-grade qualities, and the premier qualities are going to have much more premium at the end of the day.
Alain, would you agree with that? In Europe, is there this increased demand for this premium quality, and on the collection side, is it difficult to find it?
I can completely agree with Osman. Yeah. First of all, incoming side, indeed, there's a much bigger competition for this material, definitely. Outgoing, there is indeed, as I mentioned, we have our European steel mills, obviously, our domestic market. There, unfortunately, in this year, and during this year, we have seen a lack of demand. I mean, European steel production is really not doing well. But we were delighted with the interest from notably India in our prime grades. So it's one thing to say, yes, everybody's hunting for it. Yes, but it still depends obviously on your steel production. If your domestic steel market is not good, the way we have it today in France, Belgium, Germany, definitely, Holland, then there is, you still need to have the demand. There is less supply. Again, we are fighting, all of us, much harder to get the same amount of material on the prime grades. But to give you an example, for September, we were offering to the domestic mills prime grades. I think we were offering out like 8,000 tons, and I think they could barely take 5,000. So I said we're very happy to move our material to India. So all these things about export bans and whatever. I understand the decarbonization process. I understand green steel, but personally, I'd be very disappointed if we can't move our material to notably Turkey, India, and etc. etc. It would be a serious handicap for the European scrap recyclers.
Thank you, Alain. Yes, the export ban is a huge issue looming over the industry at the moment, and it's been discussed very prominently in Europe. This would be a good time now to run our second poll, because the question relates to this. So I want to get the audience involved. If I could ask my colleague here we go. To what extent do you expect the EU to restrict scrap exports? No ban, a complete ban, an export duty, ban on a country basis, or some other option? Audience, please chip in with your votes now. We'll give it a few more seconds and see what comes up. I think we have a very clear favorite. The votes are coming in thick and fast. We'll just give it a few more seconds to allow more people to cast their vote. And then we'll, as usual, put the results to our panel for a discussion. So we've got a good amount of votes now. A few more seconds, we'll close the poll. I think we can close now. Excellent. So there you go. So almost half, 49% of the audience think it will be a form of export duty, which is imposed by the European Union to protect this precious supply of ferrous scrap going forward. Alain, I'd like to come to you first. What in your view is the latest on the potential EU scrap export measures? Is there a timeline? Are there any details, or is it still up in the air at the moment?
Everything is up in the air, as far as I know. Things are being monitored, both on the steel import side, on the export side. Everything is being monitored, and I think the new date, well, one of the last dates that I heard was like 2026, European Parliament, etc., etc. But no real news. And for the record, I do agree with the poll. Export duty seems to me the most likely one, for the very simple reason that I think in Europe we're going to need billions of euros just to decarbonize, and they will have to get the material, that money from somewhere, and I'm guessing export duties will be one of them, one of the sources.
That's a very good point. The money that comes in could be used to fund the investments required to decarbonize industry. Osman, what is your view as someone who's bringing scrap into Turkey? What would how likely is an EU export ban, and what would it do to your business?
First of all, I have to say that my vote would be also export duty. I mean, same as the audience. But at the same time, I personally do believe that export duty will be applicable only for certain grades, not for all the grades. Especially, that's my opinion, especially for prime grades, there would be some export duties. But for commercial grades, I don't believe that will be consumable by the mills in Europe. Therefore, I don't believe that HMS grades will be having any export duty in short period from a European Union. That's my personal opinion, of course. I mean, I might be wrong at the end of the day. But Turkey, okay, this is the window from the European Union side, but from the Turkish side, if we look at the matter, Turkey, in any case, have to find a way to get scrap and to secure their quantity from anywhere in the world. I mean, it doesn't have to be only from European countries. This is important point. I mean, Turkey is also making import from anywhere in the world, from South America, from Venezuela, from Africa, from US, from UK, wherever the cargo is available at the end of the day. Even North Africa, even with a certain dangerous points, but they have to find a way. This is whether it's going to be export ban or not. Turkey or India have to find a way all their requirements. Otherwise, we have no chance to work, because as you know, Turkey over 70% based on arc furnace and based on scrap.
Going forward, in India also, there are high chances that the number of arc furnaces are going to increase due to decarbonization and green steel things. And the domestic availability will be good, but our demand for imported scrap will be there. And if in such fashion like UAE, Africa, Australia, now Europe will start banning the scrap, it will be a huge disrupt in the market, and Indian mills will face a very bad situation at that time. Mostly
for all of us, yes.
Mostly the companies which are situated near the sea source, like in Mumbai, Chennai, where the main raw material is through imports.
Osman, just one small point from my side, because you say, okay, we are already currently moving HMS grades to European flat steel mills. They are already putting this into the furnace. They're taking incinerated scrap. Do not underestimate the capacity of the European steel mills, or the technical capabilities at least. They can move and can use all kinds of scrap. Obviously, it's much easier to put in an A grade rather than a C grade, but they can use all of them. They are able to, technically.
Yeah, of course. Technically, I have no let's say objection on it. Absolutely. But as the capacity, as quantity, I mean, do you think that all grades can be consumable in European mills? Who is? I mean,
it will have to be. If I hear the numbers, mostly from Kallanish, if I hear numbers like we have a European, we're generating about 120 million tons of scrap in Europe, in 27 countries. Currently, we're consuming about 100 million tons. So obviously, there's 20 million tons available for exports. But if I hear that we're going into a consumption of 150 million tons by, 2030 or something, then by all accounts, we are missing 30 million tons. So we need to import to start with. And yeah, can we then still afford to export? I doubt it. And yeah, I think they will have to do whatever they can. European steel mills will have to do whatever they can to use all the scrap, and not just pick the raisins out of the bread. That's not going to work, I think. Not politically.
Well, of course, you know European market much better than me, but at the end of the day, everything is depending on economical yield. I mean, the prices. I mean, when there are more cargoes available in Europe and there is a ban for export, then naturally still scrap prices would be going down in certain level in Europe. Then scrap traders and scrap recyclers would not be happy if they are able to sell their cargoes to Turkey or to India or to Middle East with the higher prices at the end of the day. I mean, therefore, maybe if there is an economic export duty, let's say, there might be some tolerances or some, let's say, flexibility on that. This is what personally I believe, but we will see. I mean, it's in the future there will be some different opinions appeared on the stage, and we will see what will happen.
Sure, but anyway, I mean, Turkey is member of OECD.
Yeah.
I don't think Turkey is going to be affected.
It will not be affected.
Hard.
Yeah. Mostly it will be India, which will not get material. But then to what I understand is the companies which will not be able to comply with the European standards will not get material. Otherwise, the material will flow.
Agreed. Agreed.
Yeah.
I think India will be a much larger target rather than Turkey.
Mm-hmm.
Thank you.
Mr. Singh, excuse me, may I ask you, you said 88% of the consumption comes from the domestic market in India. Which grades are you meaning? I mean, which grades do you supply in your domestic market mostly?
Which places you're asking?
Grades, no, grades. Scrap grades. Scrap qualities, let's say.
Sorry, can you come again?
Scrap grades, qualities. Which qualities do you have in your domestic market?
We have prime also. We have HMS 2080 as well. We have good quality of flats. Automotive scrap is huge. We have industrial scrap, lots of industrial scrap, obsolete scrap we have. So all these are the material which is available in India.
Okay, the majority is obsolete scrap.
Sorry?
The majority is obsolete scrap.
No. The majority is your industrial scrap, automotive scrap.
Okay.
Yeah.
Okay, thank you.
Automotive industry. India is now the third largest automotive manufacturer in the world after Japan and I think China or US. India is the third largest. So we generate lots and lots of automotive scrap in India, and that is consumed within India.
Okay, thank you.
Thank you, everyone. Amar, you touched on a point there that I wanted to pick up on. What is the progress that India is making on its domestic scrap processing infrastructure so far? And considering the push now for green steel making, for decarbonisation, how are Indian steelmakers working to increase the use of scrap in their feedstock?
So India is already progressing on a very nice pace, I'll say. The availability is increasing. Government is coming up with very good policies like steel scrap policy, end of life vehicle policy. The end of life vehicle policy, its implementation was supposed to happen in April 2024, but yesterday only we received a gadget from the government that it will be implemented after another 6 months. So it has moved to October 2024. There are huge number of RVSFs, which is registered registered vehicle scrapping facilities that are coming up in India. Almost more than 55 have taken the licenses, out of which 27 have established themselves and have started to process the scrap, process the vehicles. India is also focusing on its ship breaking facilities. Between, if you recollect that most of the ship was going to Bangladesh and Pakistan, but government is focusing more now that all those ship breaking happens in India. With this decarbonization, most of the companies have started using scrap in larger quantities. I'll say all your blast furnaces also. Initially, the percentage was around 5% to 8%. Now their percentage has increased. The charge mix has increased. As a coolant, they use scrap. Now the charge is around 10 to 15%. They have started using scrap, and with more decarbonization and green steel thing, it is going to increase to 20 to 22%, which again will be a big factor for India's scrap demand. And many your BOF companies, which were mostly into blast furnace route, are trying to come in scrap route. Like Tata's have done big investment. ArcelorMittal is doing a big investment in India, and there are many other companies which are planning to come under scrap route. So what I foresee is there will be a huge demand of scrap. Government is trying its level best to increase the availability, but it seems that in near future our dependency on import will be a lot, and we will be dependent upon the imported scrap from Europe, from US, from African countries, and government is also have given very highest, like as of now our production is 120 million metric tons, near about 120 million metric tons, but by 2030 they have estimated that the production should go to 300, the capacity should go to 300 million metric tons, but the Indian companies are planned to take that production till 180 million metric tons. So there is a huge, I can say, a gap which needs to be filled, and that can be only and only filled through scrap. And the domestic availability will increase, but our appetite is going to grow big.
Thank you.
Adam, can I add just one more point?
Sure.
When Mr. Amar mentioned ship breaking, maybe audience know, maybe some people don't know. Also, one of the big ship breaking area is in Turkey, in Izmir area, in west of Turkey, other than India and Bangladesh. And therefore, ship breaking business also is getting more and more important after this export ban matter and after this green steel matter in Turkey.
Government is evaluating on day-to-day basis. MRAI is one of the major part. We are like on the steering committee of the Ministry of Steel as an advisors. So government knows about all the import bans which are going to happen. Okay, and they are trying their level best that if all these India is not going to get the material and appetite is going to be big, how will we able to get the material from other sources? That is why they have increased their thought in reshaping the shipbuilding industry.
Yeah, well, one point I would like to add what Mr. Amar said. I hope Turkish government is also will be giving some extra powers or extra, let's say, heat on this shipbreaking business, because shipbreaking business are in difficulties because of very high regulation, which should be as per environmental matter, but at the same time should be supported by the government in Turkey. That's another point. Anyhow, this is totally different subject than today.
Thank you very much. I see we have quite a few questions coming in about the Middle East, but we are very quickly running out of time. So I invite our audience to follow Kallanish. We provide the only UAE, United Arab Emirates domestic scrap price in the business. So please go and have a look at that, and contact us directly for any information you'd like to know about the Middle East. I'm sure my colleague Burcak will be very happy to fill you in. Unfortunately, fortunately, it's been a very, very interesting discussion, and there are so many more topics we could continue with, but unfortunately, we've run out of time to do that today. So we're going to bring the webinar to a close, but before we do, I would like to thank my esteemed panelists, Osman, Tureyyen, Alain, Eeckman, Amar, Singh, Burcak, Alpman, and Burcak for partaking in this very interesting discussion today. And as Burcak mentioned, we are hosting an international scrap conference in February next year. You are all cordially invited to come and join us, where we can pick up on all the issues discussed today and look ahead into 2024 and see what the situation will be there in another new year, see what surprises that brings us. But for now, I would just like to remind you of the presentation. If you would like to download the presentation, it's there in the handout section on the right-hand side in the control panel. And thank you very much to everyone for joining. Hope you enjoyed the discussion, and see you again soon. Take care, everybody. Goodbye.
Thank you.
Thank you. Bye-bye.